Hi, and welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management, and thank you for joining us here on Tuesday, August 18th for our weekly live report on the markets and update on what to be owning during this summer season. There's been a lot going on this last week since we signed off from you last week, so bear with us as we kind of get through everything here. But obviously, the latest news here in Canada, our finance minister, Morneau, stepping down, Freeland taking over, the first female finance minister Canada's ever had. So that's great. She was sworn in this morning. The Canucks, of course, are still in their playoff run with a 2-2 tie in the series. So we'll keep an eye on that. In the U.S., of course, we saw Biden nominate Harris as his vice president. So the ongoing saga of the U.S. election continues, and there's a lot of controversy around that. Obviously, it's probably going to continue right up until the very end. And of course, the Democratic Party is having their online or remote convention right now. So if you've got some time to kill and you want to hear more about the U.S. election, you can certainly tune into some of those speeches with some high-level Democrats doing talks like Michelle Obama, and I think Clinton was speaking today as well. We're also seeing a spike in our COVID numbers here in Canada. We'll dive a little bit into those numbers. And of course, CRA, Canada Revenue Agency, was hacked. So I believe the number was about 11,000 people had their information hacked. And if you were one of those, you should be getting a letter shortly with telling you what to do. But keep in mind, one of the big concerns there is if they did hack that information or your login, they have your username and your password. If you use that same username as password for any other sites, make sure you go change those and protect yourself. Always a good idea to have slight variations, especially in the passwords. Anyway, let's dive into things. As always, these videos that we put out to try to help people are for information purposes only. Do not consider anything that we present today as advice. Always seek out professional advice or do your own due diligence before acting on any strategy or portfolio changes. Feel free to reach out to us. We're always happy to help out and give you a personal review. You can reach us at mikeonmoney.com, which is a portal that you can book a meeting with us, subscribe to any of our media, our weekly reports, or just reach out to us asking for information. Always happy to help. Speaking of asking, we are using Zoom, so you can ask us questions on any topic we talk about or anything else that you have concerns about. Just click on that Q&A button. I'll see your question. I'll try to get to it today live, but often these run pretty tight on time. But I will reach out and follow up with you shortly after. If you're watching the replay of this, just click on down below. My email's down there. You can just send us a message. We're always happy to answer any questions that you have. And you can also subscribe to our future videos. We do these every Tuesday live, and we do Friday ones. We just put out a Friday video last Friday on how to invest larger portfolios, larger sums of money. Take a second to go check that out as well, and we'll have some other follow-up videos to that coming up this week. But if you do have any ideas or topics you'd like us to take a deep dive into, don't be shy about sending those in. We're happy to address those, and always looking for content people are interested in. So let's take a look at what's going on. This week, of course, we're waiting for the U.S. residential construction numbers out for July. We saw the Canadian numbers come out last week. They were obviously housing starts were down on new construction, and that was just during the shutdown and obviously uncertainty as to what that's going to look like. A lot of developers slowed down construction. Probably going to see the same thing in the U.S. With no big surprises there. The latest on the virus, again this week, the overall U.S. number has seen a slowdown, which is good. Still very high numbers, still a lot of concern down there. There's still a lot of hot spots. When we say slowdown, we mean the overall U.S. number. But if we look kind of state by state, region by region, there's still a lot of problems and a lot of concerns. So that has not gone away, and probably not for the next little while. Although Canada's also seeing some spikes, so concerns around that as well. Home builders have enjoyed some immunity for now. Hasn't been overly affected. We talked about that with the Canadian numbers last week. Of course, with all this COVID, a lot of concern around the pricing, but they've actually stayed very strong. Supply has been a bit lower, so there's some pent-up demand, and lower interest rates are definitely helping that out. Amazon's betting on the office-based work with expansion and more expansion in major cities. So they're looking at home office work. So they're investing into some cloud technology. We'll take a look at that, what that looks like. China is looking for access to the COVID vaccine. Of course, we mentioned Russia came out with theirs last week. A lot of controversy around that vaccine. But still, it is the scramble as to who's going to have it and who's going to have access to that. And we're probably going to see a lot more of this from different countries who might not be at the forefront of technology to develop their own vaccine. And, you know, how can they get access from somebody else? It's going to be really interesting to see which countries get it first and how that's rolled out to the population, because not everyone's going to be able to get it kind of day one. California is struggling, and we're also seeing this up here in Canada with farm workers getting infected. The seasonal workers, this is mostly affecting the seasonal workers, the harvesters. Of course, there's a lot of close contact with that kind of work, and we're seeing outbreaks, and Canada's got the same issues. So that might become a bigger problem and also really affect the pricing of our agricultural products into the fall here. Other things that we're seeing out there right now: Texas shale supply company founder made fortunes as the firms failed. So we've been covering quite a bit on the energy sector and how a lot of companies are out there. They're having problems. You know, they're downsizing, they're cutting, they're being bought out. A lot of bigger ones buying some smaller ones who are in financial difficulties, and we've seen a lot of Chapter 11 or CCAA filings in the energy sector. And dividends being cut as energy prices stay low. Well, during all those kinds of things, we also see some bad actors and high crush in the U.S. being one of those who bonused out $3 million to their 4 top executives, and including $1.3 million to the CEO just before they filed for Chapter 11. So kind of bleeding the cash out of the company before they bankrupt it, which of course leaves a lot less for the employees, creditors, and so forth. So, you know, investigation going on in there. In China, we mentioned, in China, there's a lot of fears around the Iron Curtain, kind of the U.S. trade tensions. This is something, you know, it's funny, this is coming back to the forefront again, but if we remember, this existed prior to the COVID shutdown. In fact, if you've been following us since late last year, you know that we've been talking about a major concern around the U.S.-China trade issues, and they're only getting worse. Obviously, COVID put it on the back burner there, or at least out of mind for a little while. But as things come back, it's getting more and more of a concern. And the latest round with TikTok and Huawei, which we're going to look at, is only led into these concerns. The U.S. has hit a financial cliff on the job front. Not surprising. We've talked quite a bit about the pent-up demand on whether it be sales or travel or even the job front, where, you know, right out of the gate, as soon as things kind of start to reopen, there's a big surge, and in this case, a lot of surge of jobs, people being rehired to positions. And then that fallen off. So the numbers dropping quickly after that surge is filled, and certainly with more shutdowns happening in the U.S., you know, the job front has been affected. We should expect that in any industry when it first kind of reopens or the early numbers come out, that pent-up demand is being absorbed. So that's a big surge. But then after that, the new economic levels that we're in are going to kind of level off at a lower rate. So keep an eye out for that in almost any of the news that we're looking at. The U.S., as we mentioned, the number of cases overall in the U.S. has slowed. Still big numbers, still a lot of concern there. So that hasn't gone away, but any improvement is good. So we're looking at as well a state panel in the U.S. The California is investigating whether some former investment chiefs in the nation's largest pension violated state conflict of interest laws with personal investments in private equity firms. You know, we've seen a lot more of this in the U.S. in the last few years, and you know, there's another panel in Congress coming up on this with the head of the U.S. Postal Service, being a very large shareholder in the private courier businesses. So we'll keep an eye on that as we see more and more of this coming out down in the U.S. Some big news. Warren Buffett made a big investment into gold this week. We've talked about gold for the last few months. Buffett took my advice. Made a big investment to Barrick Gold, one of the Canadian gold producers. You know, as we've talked about, the rationale behind this is gold is a great inflation hedge, and with all the stimulus packages out there, government stimulus packages, printing money drives inflation. So great to have some gold in your portfolio as a hedge, and we'll talk a little bit more on that when we get into the commodities. We've seen a sell-off in currency on the emerging market front. We talked a bit last week on this. The emerging markets, of course, there's this flight to safety. Whenever there's concerns in the market, that's where we usually see rally in the bigger dollars, often in the US dollar, as investors or world banks, world investors move their money into what's perceived as higher safety currencies. And of course, the emerging markets will be see a much bigger effect on that. So whenever you're invested in emerging markets, always be cautious, because you are invested in foreign dollars, and there is that currency risk. So it's not just how that market performs, but it's also how that currency performs. So keep that in mind. States are seeking $26 billion from the drug companies. So this goes back to the opioid litigations. We've seen this has been an ongoing issue down in the U.S. And Canada. Obviously, the opioid epidemic is a big problem here in Canada as well. A little bit more on the pharmaceuticals around how they promoted these things and paid doctors, and you know, it's a very involved crisis. We could do a whole half an hour on that alone, if not longer. Purdue Pharmaceuticals was one of the big ones, and they've already gone Chapter 11 as they do their payouts. So we're seeing those cases come to fruition here down in the U.S. as they're seeking to compensate not just those who are affected, but also the healthcare system that you know, took the brunt of taking care of all those patients and treating all those patients. But obviously a lot of victims and families involved. Oops. We've also saw New York City opening up a bit more, starting to open up their gyms. So little bit by little bit, they're opening down in New York, which was really hard hit overall. Hopefully that is not the case on the you know, if we do see a second wave, that New York keeps it under control. And we may see them close down again. We saw that in California where they opened and closed. But it's good to see New York is improving. We mentioned California is still struggling with their workers, keeping them safe. And that's going to be an ongoing theme as more and more industries open up. And we talked about China looking for a partner to get the vaccine. So just looking at the numbers globally, kind of scary as I look at these things every week and see the movements, and certainly when I look back even at, you know, month by month, it's even scarier. You know, worldwide, over 22 million cases, almost 780,000 deaths, you know, approaching 800,000 deaths. US, obviously, you know, the big number in there, 5.6 million, coming up on 180,000 deaths. As always, remember, this is not a complete numbered list. I kind of fit it so that Canada's in there. So I take out a lot of countries that are above Canada on those numbers. So, you know, you can go to Worldometer and see these things live. I don't recommend you do too often. It's a little depressing. But if you're interested in seeing a specific part of the world, you can see the full list there. Canada broke through the 9,000 deaths. You know, which is concerning, but it did take us a long time to get there, and hopefully we can level things off here quickly. As I mentioned, the numbers have been increasing in the certainly on the cases numbers have increased quite a bit, especially in the last week. Oops. So let's dive into where we are today. So market recap. So last week, as opposed to the week before, where we saw negative NASDAQ being our technology market in the US, we saw NASDAQ being stronger, all-time highs. Not surprising, we've talked about tech, kind of driving the front of this rebound as more and more companies using technology through the COVID shutdowns, but also using it dramatically as they reopen as well, which is great to see. A lot of innovation has come out of this, a lot of efficiencies. So we'll probably see that continue. But as we mentioned before, do be cautious. There are still some pretty high valuations on some names. Don't be afraid to take out some profits and look for some better values in other areas. We're going to talk about those areas at the end of today's talk. But it was great to see NASDAQ doing well. S&P also moving up, getting close to record. Again, most of that is on those tech names. We have seen some other areas pushing forward, but for the large part, like healthcare and pharmaceutical. But for the most part, it's been driven by tech. We've seen areas in like the financials and industrial stocks being weighed down on those indexes. And we'll talk a little bit about the financials. They have not rallied the way the other areas have, but that doesn't mean they're not good areas to invest into. And so we'll dive a little bit more into those in just a little bit. The dollar in the US slipped a bit. Again, as the markets drive forward, the dollar tends to weaken slightly as people move out of US dollar and into equities or into other currencies where they might see some better value. And of course, we have oil prices holding steady with OPEC meeting later this week, which we'll talk about in the commodity section, as well as gold prices. So coming up, Walmart is expected to post their same-store sales for the second quarter, and the expectation is going to be strong, right? We had that surge. We've seen more and more people looking for value. The luxury brands have been hard hit through all this as people, just keep their wallet a little bit closer, pitch the pennies a little bit more. But also what we've seen in a lot of retailers is we've seen a lot of costs being driven up. So while revenues rise, profits don't as much as they absorb more shipping costs as people order online more, and just more preventative measures have to be and cost in keeping the store safe. So we'll see those coming out of Walmart. As mentioned, we're also looking at the Commerce Department to show us the housing starts, which will probably be a bit lower. So all out expected this week. Home Depot is expected to report. Now this one is one that's expected to be fairly positive. A lot of people took on some home renovation projects. I know me and the kids built a beautiful shed in the back. You should come by and see it sometime. It turned out great. We're really happy with it. We did a bunch of other yard projects, and I know almost everyone I've talked to has taken on some sort of project. So that's really helped the likes of Home Depot. But again, we'll be looking to see how they did with costs during the or even now, how their costs may have increased during all this. So we'll keep a close eye on that this week. Other news out of the U.S. is, again, I mentioned the pharma industry. They're dipping into their coffers, or Sanofi is dipping into the coffers to, invest in about $3.7 billion, to add to their drug lineup for specialty drugs. There's not just medications for COVID treatment or vaccines. Obviously, there's we talked about that surge where there's been a lot of pent up demand as a lot of the different surgeries and treatments that weren't critical were postponed to keep room in the hospitals, or people just didn't feel safe going to their doctors or the hospitals. And as people get back, all that's going to get caught up. That big surge of demand will play through there as well. So we're starting to see a lot of action in that area. Amazon, as we mentioned, is invested in cloud service company Rackspace. and this is to expand their cloud services to work or capture more of that stay-at-home or work from home sector of the market. Trump is looking to ban TikTok. We talked about this last week. Of course, it's an ongoing saga with lawsuits and fight-in negotiations. We're going to see what the fallout and what the final outcome of that is mid-September as it continues to move through, and a lot of closed-door negotiations, but a lot of verbal concerns over how that was presented. China's JD.com posts upbeat results on online surge. Again, more and more people shopping online. This trend is really been driven, obviously, by the shutdown, but it's also a trend that was rapidly growing prior to this. Last holiday season was one of the largest online seasons ever, and that was a trend that had been moving forward year over year over year. So this has just pushed it even further. So not surprising that we're seeing those areas of the market doing incredibly well. And we should see that continue. I don't think it's going to stop even after things reopen. I think it's actually shifted some behavior of people who weren't sure about doing it, started to take advantage of it and are getting more and more comfortable. Apple's expanding to independent repair shops. So this is just decentralizing some of the repair to local licensed independent repair shops. It just takes a burden off of the Apple stores to have to deal with all the repairs and ship the equipment back to centralized repair shops that they have, trying to decentralize all that. So just a cost move on Apple and a pretty common practice in that industry. In Canada, we are looking at the factory sales data for June to be released. We are expecting a surge. Again, that pent-up demand, we do expect it to kind of jump for the June numbers, which will very positive. Don't mean to sound negative on that, but it's probably just that early surge. Really looking for a trend over 3 or 4 months after kind of the reopening to see where we level off at. Canadian home sales surged to record highs in July. As I mentioned, the starts were way off, but the sales are up. Low interest rate is keeping things there. We've got really short supplies, but demand is still out there. So that's really positive. People have a lot of value, especially in BC, are in their homes, and we don't like to see that fall. So good news on that front. The TMX group, that's the Toronto Stock Exchange group, had a temporary CEO, has been made permanent. So good news on continuity there is strong. And of course, the ongoing saga with the Huawei CFO that's in a Canadian prison here, BC looking to be, or the US looking to deport her down to the US. More controversy and fighting over the information and documentation that the US filed, whether it was complete or incomplete to the Canadian court. So that's going to go on for a while. On the exchange front, Forex. So there's a lot of talk around the U.S. currency. It has shown a little bit of weakness. We mentioned it's going to ebb and flow on the strength of the markets. The stronger the markets, the currency will weaken a little bit as people don't feel the need to have safe money. And then any weakness in the market, the U.S. dollar is perceived as the flight to safety. So we would see that rally again. So volatility in markets, volatility in currency. That being said, despite all the things that are going on, Trump's presidency has seen quite a bit of volatility in the markets and certainly in the currency, but there's still some concerns with what would happen if Biden won. And it's not really that markets have a preference one or the other. The markets usually just like to know who's going to be in. Certain sectors do better under different governments, depending on what areas that they support and fund. But when it comes to currency and the overall market health, it really depends on what they inherited. So the current government inherited a really strong market from the previous U.S. government and kind of continued. But where are we going to end up here in November economically and how strong that market's going to be? You know, whether it's a Republican again, they're going to be dealing with obviously some challenges, and if it's Democrat, they're going to be walking into a bunch of challenges as well. So I think the uncertainty is slightly warranted, but I don't know if I would put it on one candidate versus the other. I think it's really just there's going to be a lot of challenges in the U.S. economy come the fall. Meanwhile, the pound has been doing better against the U.S. dollar over in the U.K., and that's you know, it's mostly there's a lot of positive feelings about the Brexit. In fact, nothing better could have happened for Brexit than COVID or the shutdown. They were headed into a very abrupt no deal exit prior to this, and obviously COVID shut down. Everyone took a step back to deal with the greater problem at hand. But that's also calmed, you know, both sides down a little bit on expectations. So, you know, the negotiations, people are much more interested in getting the economy up and running or getting it strong than really fighting about the details of Brexit. So it may have helped them quite a bit, but if they do go to a new deal, we could see the pound pull back substantially there. So we'll have to watch as we get closer and closer. On the commodity front, oil pretty much flat down slightly. Again, we've talked about oil in several, you know, since the May lows. Really don't see any upwards pressure to bring the pricing in line. In fact, we have the OPEC Plus meeting coming tomorrow, Wednesday, where the countries are going to talk about the current inventory levels, but also the current supply levels, which were cut dramatically back in May in order to shore up the pricing. A lot of those countries in the greater OPEC group really rely on the sale of oil for revenues, and of course, all countries are looking for extra dollars these days. So it's going to be hard to keep everybody in check at the same level. Some countries might be willing to sell for a much lower price just to get some revenues in the door. So we'll keep an eye on that. But again, we don't see a lot of positivity in the oil sector front. Gold dipped below 2,000 briefly there, and it moved back again on some Asian trading dollars, moving it back above the 2,000. Also, the Buffett announcement of him doing investments, we're all positive for. This is a 6-month year play. We can easily, I think the most forecast between 2,200 and 2,300 an ounce. And we'll see that get stronger and stronger as the inflation starts to show its ugly head, probably later part of this year. In fact, we've already seen some of inflation numbers increasing. And of course, the bond yields are down. Bonds do not like the thought of rising interest rates. So, that's going to continue as we go into inflation as well. So let's talk about potential best areas of growth. Now, I'm going to talk about, you can see on screen here, we've got a bunch of names. I'm not recommending these for your portfolio. I'm going to talk about the sectors as a whole and the names behind them and where we see the best growth potentials. And also be very cautious about the prices you're buying into, because there are some overvaluations in some of these areas already. And I'm going to touch on some tips, some ways you can play these sectors to better enhance your portfolio, or certainly bring down the volatility in your portfolios. So energy, as I mentioned through this, not a big fan. Don't see a big turnaround there for a little while. But if you want to play the long play that demand is going to come back, there is some cheap valuations in here. So we have a list here in the energy sector of some strong names, strong balance sheet. Suncor, if you want a kind of integrated supplier, really like them. Good balance sheet, strong company. Will survive the storm. Probably going to gobble up a few other small ones along the way. They'll shut down some projects. That's just normal smart business. But I do like them if you're looking for an oil play. Same with Canadian Natural Resources. Although the TC Energy or TransCanada Pipeline and Enbridge, which are pipeline companies, here's I like these plays or positions better in the sense that these are service providers to that core play, being oil or energy. So, you know, their revenue is based on supply, or sorry, demand. So as demand increases right away, the revenues increase. Demand never really goes to zero, so you know their incomes don't generally go to zero. So they're not tied so much to commodity price, just more the health of the industry. So I find them, you know, much better cash flow plays, much stabler pricing, you know, as far as the valuation of the stock goes, and you know, kind of really steady, great long-term plays, as opposed to go after trying to pick that one that's going to benefit the most from the underlying commodity price. So, you know, if you are interested in the energy sector, it is a long play there. There you go. Materials, your golds and metals we've talked about. I do like gold sector. We've had gold in there as early as last November, December. And we've added some more along the way. You know, Barrick, as I mentioned, just had got the big Buffett infusion of cash. A little bit overvalued right now, in my opinion. I don't know if I jump on it just yet. The other names, Franco-Nevada, Wheaton, Lundin, all great. I also really like when you're looking at a sector play like that, like gold, is an ETF. Nothing wrong with that. XGD is a great one in the gold space. That gives you exposure to broader number of firms, you know, so even if one of them doesn't do well, as long as the overall sector is growing, you're going to benefit from it. Don't have to pick that one winner. The financial side of things, I mentioned the financials really haven't bounced back. Most of this because they're writing down bad debt on their balance sheets, or potential bad debt, as we're seeing more and more companies, you know, the retail space, the energy space, you know, going CC11 in Canada, or sorry, CCAA in Canada, Chapter 11 in the US, you know, is really affecting their loan books. But I still think that they're a great play. They pay a great dividend. You know, again, a longer play, but really, I think, strong. We've got our toe in the water there. Definitely would be willing or very bullish on adding some more here in the fall. And once we get through a little bit more of the write-down period on some of the loans, but still think that they're you know, great investments here in Canada. If you're looking for some alternatives, you know, Brookfield Asset Management's a great one. A lot of global exposure. Sun Life, same thing, one of the largest financial institutions. Intact Financial, more of an alternative lender, and then TMX, which is the TSX group, which is the markets, which services, again, they are servicing those industries. You know, sometimes you get better valuations going just outside the main group. On the technology fronts, I put Shopify there. So no, I'm not saying run out and buy Shopify. In my opinion, I think it's kind of overvalued. It's done super well if you've owned it. Great. You've had a great win. I suggest you maybe take some little bit off the table. Doesn't mean it's not going to keep going. So Shopify, if you're not aware, is like an Amazon, so a competitor to the Amazon online shopping provider. You know, here's a great example of kind of going outside the main names to find the value in the service side of things. So, you know, the online shopping technology, you know, we know the name Amazon, we know the name Shopify. They've performed amazingly well for investors. But trying to pick, you know, there was 100 other ones that didn't make it. So trying to pick the one that's going to be the leader, that's going to be the top performer, is very difficult. But if you believe in that industry, and say, you know, people are going to shop online more, and you've heard me say it before, I've held these positions for a long time. Visa, MasterCard, we added PayPal last year. You know, they all benefit from online payments, because all these sites require that you use those payment types. So more and more people are using it, more and more those companies benefit, even though they're not the sexy tech name. They are tech companies, and they do well. I don't have my list here because they're not Canadian, but those types of side plays I think are great, and they've seen some incredible returns, you know, with much less volatility than those kind of big headline names. So again, those are areas I think things to look at. Canada's not big in technology. We will do some on the US front as well. Not today, but just for interest in time, but I will get some US names as well. So on the industrial front, again, talking about ways to take advantage of services, Canada National Railway, CNR, been in our portfolios for a long time. The supply, anything you buy, doesn't matter where it's luxury items or staples, it's being moved. And CNR is big supply chain. Transportation company, certainly across Canada, and we're a big country, so really always like that nice, steady, even, great growth name, and continues to do well for us. Same with waste connections. Managing waste and recycling is huge, and more and more communities are privatizing as opposed to managing it themselves, and waste connections done great in there. Toromont, Stantec, Boyd, again on the industrial side, all great names if you're interested in those sectors. On the retail front, or the consumer discretionary side of things, Dollarama. We talked about Walmart earlier, coming out with the earnings, and of course, people just being a little bit more careful with their dollars these days. So we like Dollarama. More and more people are using it. I think Buffett had came out with the analogy to say that he judges gauges the health of the economy based on how many Mercedes he sees in a Walmart parking lot. So how many people are just being a little more frugal, and that's where we think Dollarama is probably better positioned than any big brand name store during this. Consumer staples, we've talked about the grocery stores, some great names out there, the Loblaws and so forth. But I really think on a value front, Allemand Couche-Tard is, it's regional, but they're expanding. They did an acquisition earlier this year. I think from a value standpoint, it's really, really strong, and still a lot of legs of growth there to go. On the communication services side, you could package this into technology. BCE, TELUS, we really like. TELUS is in our portfolios, been for a long time. Great company. Did a lot of right things earlier on. We don't have Shaw Rogers on there because we see that they just have more expenses coming up on upgrading equipment. Getting the right services to people. I think Bell and TELUS did a better job earlier on with getting the fiber and faster services to people. And obviously, not just with COVID, but obviously more and more people at home, people working from home, there's that demand on bandwidth. But also as more and more people moving away from the traditional cable packages and moving to streaming services, they're just well positioned, and we see that as a great growth area. Utilities, always a fan of utilities. People always need power. Fortis has been in a portfolio for a while. Brookfield Renewable, I think it's a little pricey right now, but still quite like it. We saw a good pullback there. It'd be great. And Algonquin's been a favorite of mine for years. Smaller producers out of Ontario, but just regular growth, always expanding their total wattage and outputs, and just well-run companies. So, just keep looking at that. So that's all the Canadian names I have, just to kind of talk about the industries. Remember, don't run out and just buy these names. Really look at what sectors fit in your portfolio, what sectors that you're interested in. If you have questions, send them off to me, give me a shout. Happy to talk to you about the sectors or the opportunities that might fit into your portfolios. And also entry point. We don't really time the market, but at the same time, we don't like to overpay for things. And sometimes, especially in these volatile markets, certain days or weeks can be a little bit overpriced, and you don't want to buy at the wrong time and then wish you bought a month later. So do keep that in mind. We'll talk a bit more about the U.S. because obviously there's a lot more names down there and a lot more opportunity. But really, the message I want to drive home is looking for those side plays. Even if you're talking, someone asking about 5G technology, obviously that's more of a U.S. play. But rather than trying to pick, the manufacturer, the company that's going to get the 5G, win the 5G battle, you can look at the service industry, that those cloud industries that have to service it, or the the real estate companies that own all the cell towers that all the repeaters and technology has to be mounted to. All those are going to benefit highly from 5G, and yet they are much more stable cash flow type of providers, much more stable pricing and growth. So rather than trying to pick that one volatile name that might be the win in the portfolio, I highly recommend you look at those. So with that, I'm going to sign off this week. If you have any questions, if you're watching this on the replay, reach out to us. Happy to answer any of your questions. If you have any thoughts or ideas that you'd like us to see us presenting these, by all means, let us know, because we do our deep dives weekly on Fridays. We can include it into there. If it's something you want to see more information on, go to mikeonmoney.com, where you can sign up for any of these things or see any of the replays, our weekly reports. And if you want to subscribe to get those on a regular basis, by all means, do that as well. With that, I'll let you guys go. Enjoy your sunny day, as we are getting some amazing days here to end off I guess we're in the middle of August. We got a couple more weeks. Hopefully it stays the same. Get out there, enjoy it. And with that, I will talk to you next week. And I hope you all do well this week. Thank you. Bye-bye.